car crash television. It's something you know you should turn off, but you just can't help yourself. When you think about Brexit and the UK today, you've actually got the inverse of that. You know you should keep watching because it's unprecedented, it's significant, it's going to make a big impact on where the UK goes in the next 5 years, but you just can't. It's been going on too long, it's too intractable, the divisions are too great. At Moneyfarm, we still need to deal with Brexit. The advantage we have is we don't need to think about the next week or the next month. We can typically take a much longer time horizon, and we can think about the implication of all these events and the broad range of outcomes that we face in the context of a portfolio construction that looks at a wide range of asset classes, a wide range of geographies, and works to construct portfolios on a global basis. Let's take a step back and think about, in broad terms, how Brexit filters into financial markets. Political crisis, be it a general election or no deal, typically translates into weaker sterling versus our other currencies. In a similar vein, within the bond market, what we've seen is that political uncertainty, which importantly might translate into economic uncertainty, means bond yields have fallen. In equity markets, it's a little bit less clear. That's because the FTSE 100, most specifically, typically benefits from a weaker currency. But as far as risky domestic UK assets are concerned, the economic uncertainty has translated into concerns about corporate profitability and earnings growth. Let's bring all of that back to portfolios. When we think about what we've done over the last few months, there are a couple of points to make. The first is, in our higher risk portfolios, we've reduced a little bit of our sterling exposure. We think that the probability of a negative outcome from the Brexit negotiations is higher than it perhaps was 6 or 8 months ago. But we've also maintained a fairly global stance. We continue to have a broad range of asset classes and a broad range of equity exposure. People talk about the challenges of building portfolios in a time of such uncertainty. But the truth is, when you build portfolios, it's always uncertain because you're trying to build portfolios for an unknown future. Maybe at the moment it's a little bit more difficult because you've got these two very different outcomes that you could see, and financial markets might treat them very differently, at least in the short term. The important thing, though, is to maintain a long-term focus and a disciplined process. We typically don't trade very much, and we're not going to change that to try and manage our way through all of the uncertainties in Brexit. We'll continue to focus on the long term and construct portfolios that we think will provide a broad range of exposures to our clients.